Many people picture a property insurance claim like this. Something gets damaged. You call the insurance company. They send someone out. You get a check. That's the version in the brochure. The actual process involves more steps, more decisions, and more things that can go wrong, especially if you've never been through it before. In this video, how a commercial property claim actually works from start to finish. I'm Brian Woods with Integrity Insurance and Risk Management. We work with business owners, commercial real estate investors, and independent producers who are serious about protecting what they've built. On this channel, we break down insurance and risk management in plain language. No jargon, no fluff, just the stuff that actually matters when something goes wrong. The decisions made immediately after a loss have a real impact on how the claim plays out. 4 things need to happen quickly. 1. Report the claim right away. Most policies require prompt notification. Waiting to see how bad the damage is can give the insurer grounds to question the claim. Report it first, then assess. 2. Document everything before anything is moved or cleaned up. Photos and videos of the affected area. More than you think you need, because once the cleanup starts, that evidence is gone. 3. Protect the property from further damage, board up openings, tarp a damaged roof, address immediate safety issues. Your policy actually requires this. It's called your duty to prevent further loss. Failing to do so can reduce what the insurer pays. 4. Don't throw anything away until the adjuster has seen it. Damaged equipment, materials, inventory, keep it until you have written clearance to dispose of it. After you report the claim, the insurer assigns an adjuster, whose job is to evaluate the loss and determine what the policy should pay based on its specific terms. Here's something worth understanding clearly. The adjuster represents the insurer's interest in the process. That's not a criticism, that's just the dynamic. Their job is to arrive at a fair number based on the policy. Your job is to make sure you're presenting the full picture. For significant losses, anything above $100,000, anything involving lost business income, or any situation where the adjuster's initial number and your own assessment are meaningful different, you have the right to hire what's called a public adjuster. A public adjuster represents your interests specifically, typically for a percentage of the settlement. For complex commercial claims, the difference between an initial offer and a negotiated settlement can be substantial. Real quick, if you're finding this useful, subscribe to the channel. We put out new content every week on commercial insurance, risk management, real estate protection, and business liability. All in plain language. It's free, and it'll save you from learning these lessons the hard way. Commercial property policies pay losses on one of 2 different bases, and the difference matters a great deal. Replacement cost value means the insurer pays what it costs to repair or replace the damaged property with new, comparable materials, no deduction for wear or age. Actual cash value means the replacement cost minus depreciation. A roof that cost $80,000 to replace but was already 15 years old on a 20-year useful life is worth $20,000 on an actual cash value basis, not $80,000. That's a $60,000 difference the owner absorbs. Know which basis your policy uses before you have a claim. It changes the math significantly. Most commercial property policies contain a coinsurance clause, which requires that you insure your property for at least 80 or 90% of its actual replacement cost. Here's why that matters. If you're insured below that threshold, the insurer applies a penalty on every claim, not just total losses. Even a partial loss gets reduced proportionately. If you're carrying 60% of the actual value when the requirement is 80%, every claim payment gets reduced accordingly. With construction costs having increased significantly in years, properties that were properly valued several years ago may now be below the threshold without anyone realizing it. This is worth verifying specifically. If this was helpful, share it with a business owner or investor who needs to hear it. And subscribe if you haven't already. New content every week. If you own commercial property and want to make sure your coverage is actually set up to pay what you'd expect after a loss, that conversation is worth having before the claim, not after. Reach out to Integrity Insurance and Risk Management through the link in the description. I'm Brian Woods with Integrity Insurance and Risk Management. We'll see you in the next one.